So hello everyone guys, welcome back to my channel, and today I'm gonna show you one simple day trading strategy what will help you to increase your trading skills and give you a lot of profits. So for this simple day strategy we need to use only one simple instrument which are called FIVG. I told you about this in my previous videos about fair value gap. You can watch it on my channel where I describe this tool in 10 minutes and give you a lot of simple setups to trade with FIVG. So the FIVG shows us an efficient price distribution on the chart and the two simple way what we need to do. First, we need to define our FIVG in the right way. It looks like that, the long candle which it's the candle behind, and after it is a bearish FIVG, and the bullish looks the same way but in our direction. So you can press Alt-R, build with Scan, press Alt-R, and you will see our type of this FIVG. So when you define a FIVG on the chart, you need to mark a zone which wasn't fulfilled. It means when the price don't back up to FIVG zone, where the smart money traders don't get a huge amount of positions, and we will return the price to this zone, and after that it's gonna drop down. This scenario are gonna look like that, and you can open a deal in this situation in different ways. For example, with conservative take profit, conservative trade, with conservative entering the trade, and take profit on the near pool of liquidity, stop loss on the top meanings of the FIVG is the first way. The second type, you can open it from the 50% of the FIVG zone. You can define it by the Fibonacci grid. It is risky way to place a deal because not every time the price are gonna get our 50% of FIVG. Sometimes it can get a reaction from just beginning of it, and you can place the take profit at the end of the FIVG zone with take profit on the nearly all of liquidity, but it is very risky. As I said, you don't get into the deal, or you can be stop loss. And the conservative way to place your stop loss, it's above handle of FIVG. Yes, you get a worse risk-reward ratio, but it is the safest way to place your stop loss in these situations. And now you can see how the bullish FIVG looks. It means the price are gonna gap. So it means the price are gonna go into the long directions after the cleaning of bullish FIVG, like on this example. And the one more trick you can do for increasing your trading win rate is waiting for the break of structure, which are gonna show us our future movement. It's a breaking of previous lower high or higher low, and it shows us a changing of direction. You can see the videos about break of structure on my channel, so follow it. Now let's go for the real chart, for the real examples. For example, so what we can see here, our FIVG formed, we can mark it like that. So this is the zone of our FIVG, and we can place the deal like that already with a conservative stop loss. But in this situation we don't see any good take of profits here, so we need to look in the previous chart and place it, for example, like that, or the capturing of liquidity on the left side. And now let's watch what will happen. So thank you guys for watching, and don't forget to follow to my Telegram channel where I'm gonna drop all the learning materials. Follow the link in the description, and welcome. Wow, extremely good deal. Just in 1 week you get a profit about 1 to 7. In this situation, if you will risk $10, you will get 7. And if you risk on the 2%, like me, for example, you're gonna lose $20 and get 140. You can trade by this strategy every day, in every movement. Just be sure in your market structure, don't trade against it, and always look on the higher time frames. For example, here we can open another deal. We are already in profit and we don't scare it to open the deals like that. We can place it on the capturing of this liquidity, and we get a good risk reward ratio. I don't know why the tool doesn't work, but it has a very successful deal. And now we can wait for the another FIVG. So here we can see another FIVG formed. We can mark it like that. Bam, bam, bam. Place deal like that with a capturing of liquidity, for example in these meetings. But if you don't sure on your take profits, for example like in that situation, you can fix your profit by part, for example 50% here, 70% here, and 100% here. So let's watch. So on our successful deal, and don't forget the best risk reward ratio is 1 to 3. Don't trade in situations, for example like that, if you get a lower risk reward ratio, because won't give us a result in the future. In the trading you need to play to the long distance profit. And now one good trick. If you see on the chart, for example 2 FIGs like that, you need to take the Fibonacci grid and place it from the lowest point to the highest to define the correction of our movement and define our premium and discount market, and of course look optimal trading entry point. And these FIG are not situated in these meanings, but these are extremely correctly are in it. So it is gonna be the better place to open our deal, not here. Here we have now optimal entry zone. It is situated in the discount market and it is a good point to open our deal. We can place a conservative stop loss, watch, take profit on the capturing of liquidity, but we have a bad risk reward ratio, and in this situation you have two options. Don't open a deal or place your stop loss more risky, for example like that, and let's go like that and get a risk reward ratio 1.4. And let's watch what are gonna be happen. I'm not sure what the price are gonna grab our price, our entry, but here's the price get our point, and we get stop lost. So not all deals are gonna be successful. Just look for the all factors to open a good deal. I think I showed you all. So the two instruments what we need is a Fibonacci grid, which are gonna help us to define premium and discount market, and we are gonna trade from the grabs of liquidity. And as a third support instrument, we can use a FIG or order blocks to get sure in our trading entry. So let's begin with the definition of premium and discount market. So it's defined by the Fibonacci grid, and to define it correctly, if you have a downtrend movement, you need to take a Fibonacci grid and place it from the highest point to the lowest to define your meanings. And of course, you need to do the settings of Fibonacci grid like me. You can double click on it and set the settings like that. So, and after that you can define premium and discount. The premium is above 50% of Fibonacci grid and discount are lower than it. And how it helps to trade us in this situation in the sideways movement. Premium market defines what it is the most expensive price what the market can provide you at that moment, and it is not optional to buy on these meanings, and smart money traders are gonna sell this on and the price are gonna drop down. And the discount markets is the best prices to buy. And remember the one rule: in the premium market we are going to sell, in the discount we are buying. So now I inverted our chart, and if we have an uptrend movement, we need to place the Fibonacci grid from the lowest point to the highest. And of course on the top we have premium market and at the bottom a discount. So let's begin with the trading of sideways movement. We need to wait for the formation one of it after an impulsive movement, for example like that. We have a uptrend movement, and of course we are going to take a Fibonacci grid, place it from the lowest point to the highest, which were here, and let's take time back. And now we have a premium market which are formed on the top, and the discount market which are formed on the bottom. And now we have a sideways movement. We have a liquidity pool on the top, we mark it like that, and the liquidity pool in the bottom. And of course we have a good 3G points like that. So what we need to do? To trade successfully here? We have an uptrend movement, and now we are looking for the sideways movement formatting, and we are going to wait for the liquidity grabs on the top or at the bottom. Especially here in this situation, in the uptrend movement, we are waiting for the liquidity grab from the highest point of it, and after that we can enter a good short deal for the capturing of this bottom liquidity. For example, let's look on the price movement. Here we have some good liquidity grab which are for break all the liquidity, and on the retest of this candle which are grab all the liquidity on the top, we can entry, a good short deal with the risky stop loss like that, and the grabbing of liquidity on the bottom. And let's wait. Here we can already fix all our position and we already get 1 to 8 risk-reward ratio. Here we got what our deal are successful, and let's watch for the an hour changes to get a good deal. Here inside this sideways movement we can define this FUG from which we can enter a good deal with conservative stop loss and good liquidity grab and get a very safe good deal with 1.4 risk-reward ratio. And if we get this FUG, the price are gonna feel it. And we has one more FUG here, which are touched by the price, and we can open a long position with a risk stop loss, the feeling of our FUG, and get good risk-reward ratio. And now, if he has 2 liquidity grabs, that's gonna be the third. And here we have a third liquidity grab, and if we are waiting for it, you could open a good short deal with FUG or wait for the retest of it. So just in one sideways movement on the chart, we can open a wonderful 3 deals with a good risk-reward ratio, which are gonna get you a huge amount of money. Here we used only 3 instruments, it's liquidity grabs, premium and discount market, and FUG, from which we opened a good deal. You can open a deals from FUG in 2 ways. From the feeling of 50% of it, you can get a better risk-reward ratio, but it has a low chances to grab your deal. And the second way is from the beginning of FUG, is the more easiest way to the price to get your deal. But entering from the liquidity grabs like that are very risky. We need to wait for the retest of candles, for example, like that, because here it has a FUG or order blocks in these meanings, and don't enter just from the liquidity grabs, wait for the retest of these meanings. So let's look on another example. It has an Ethereum chart. Let's place the Fibonacci grid from the lowest point to the highest of the beginning of our sideways movement. Let's place a premium and discount market to define our the best parts to enter the deal. And what we can see from the beginning, we don't have any good FUG to entry to this point, but we have a first liquidity grab from which you can open a good deal on the retest of this candle as I showed you what I showed you before, and enter from this liquidity grab after you entered that deal and get a good risk-reward ratio. And if you lose any of next deals in this sideways movement, you are not gonna be in losers, you are staying in profit. And of course, after you entered this deal, you can take the entry from the testing of this FUG zone and enter from this point or this point, and you are going to always be in profit. If you entered in this, you can close the deal on the capturing of this liquidity, and if you entered from this, you can place your take profit on the capturing of this liquidity. And remember one golden rule: place the stop loss where the crowd are gonna place where entry to the deals or take profit. It's the main smart money rule. The best ways to place your stop losses or take profits is the liquidity grabs like that, because afterwards the the price can be reversed or different situations can happen, and you can be liquidated in the situations like this. And the other way to place your take profits is on the FUG zone, because the price are gonna feel the FUG, and after that it's gonna reverse the price to our direction. It has a higher percent of changes of this scenario, and the FUG is a very good place to play. It's a very good instrument to place your take profits or 50% fixation of your deal. And now we are moved to the BTC 1-day time frame, and here we can see a good sideways movement. We're gonna place the Fibonacci grid from the highest point, from the lowest point to the highest, and define our premium and discount market zone. And what we can see here, the best entry point here from entering through the liquidity grabs. Now I'm showing you deals which you are missed because you don't watch the videos from my channel. The one change to enter a deal from grabbing this liquidity, and the another change is from grabbing liquidity here. So now let's define where the price are gonna move next. We have a liquidity grab here, and we get a 60% chance what the price are gonna grab liquidity here, grab the liquidity here, retest zones on these meanings, and after that is gonna feel the FUG and feel this FUG or FUG lower. To define the most important FUG, we need to place a Fibonacci grid from the beginning of this movement to the end and define our premium and discount market FUG, and we have a FUG on the OTA zone, and the price are gonna get the reverse from this VG or this VG. So let's place our entry zone, for example, like that, and place the deal to the long with the grabbing of this liquidity and conservative stop loss like that, and we get a good risk reward ratio. Let's move it like that. So it's the most, so I think the scenario are gonna happen like that, but price are gonna break down the liquidity on some news, for example, like that. After that, I give you a 100% what it's gonna retest with PUG and like that. So we need to wait for the new all-time highs of the BTC, and in this video I showed the most simplest way to trade a sideways movement every day. It's work on every time frame, not only one day. You can trade like that on the 50 minutes time frame, but you need always match the trend which are now situated on the highest time frames. For example, here we have a local bearish movement, and you need to wait for the bearish movement on the 4-hour time frame or lower. You always need to match. For example, 1 hour time frame you can see the global uptrend movement, but local you has a downtrend, and you need to trade on the 50-minute time frame or 30-minute time frame. Look for the good positions to enter, to look for the reverse of downtrend and open the deal to the uptrend if you has a good reverse formation, or trade by the local trend, because trend is your best friend. So thank you guys for watching. Follow my Telegram channel where I'm gonna drop all the materials for this lesson. Drop some likes and try comments about your experience with this trading strategy.